Hi, I'm Caauwe, Director of Business Development for the CBOE Futures Exchange. Certainly we saw a spike in volatility. The March contract, which expired March 16th, began the month at 19% volatility, ran as high as 26.40, or nearly 7.5 volatility points. That is very significant in terms of measuring it against previous month's volume. Additionally, we saw two back-to-back days where volume in the VIX futures traded 95,000 plus contracts. We're really pleased about these record levels of open interest that were set during the month of March. For the first time in the product's history, open interest exceeded 200,000 contracts. And what this tells traders and investors is that there's a product that's deep, liquid, robust. What was interesting during March is that we saw activity across every contract month listed in VIX futures. Now, we list 8 contract months, and that is what we call the term structure of VIX futures. Given these geopolitical and environmental risk in the market, investors and traders were placing positions across the entire term structure as they were uncertain or unaware of when these risks would ebb or subside. Certainly the volume increases we saw during March were due in part to the world events that we had previously mentioned. Also be aware that there's been more knowledge on how to use VIX futures. There are more notes, structured products tied back to VIX futures. And at the end of the day, it's helped grow the entire product suite here at CBOE, leading towards more traded volume in both VIX futures and options. Last December, the CFE extended trading hours on VIX futures to begin at 7:20 a.m. This was in direct response from investors and traders who were looking to either establish or offset positions ahead of U.S. economic releases like retail sales or producer price index. Additionally, European investors who trade VIX futures came to us looking to offset or again mitigate and even establish positions when there was European Central Bank action or IMF news that came out overnight. Early volume during December, under 2% of our average daily trading volume. In February, early open accounted for 3.5% of the average daily trading volume. And in fact, a couple of days during February, during the time of the Egyptian turmoil, early open contributed 8% of the average daily trading volume. Now, as we go through March, we're sitting comfortably around that 3.25% of average daily trading volume coming from early open. And the traders who aren't trading early open look to that as a barometer or a pricing mechanism for how to trade VIX options. So it's served many purposes, from not only allowing traders to establish or offset earlier in the day, but allowing market makers in VIX options to price more effectively. On March 25th, the CFE listed our newest VIX-related product, and that's the GV, or the Gold VIX. It's based off the Spiders Trust GLD Gold shares. Now, current S&P 500 VIX traders will be familiar with the methodology behind it. Keep in mind, though, that the way volatility moves in the metals markets is a little bit different than what they see in the equities markets. It will take some time for us to build the liquidity, build the awareness, build up the education for Gold VIX. And certainly when we list Gold VIX options later on in April, the market making community here will help support the futures contract, and price discovery will certainly become a lot more efficient.